Hi, it's that time again. It's me, Stephen Englander, for our live show on telling you how to run your business and make fortunes. So tonight we've got a few things we're going to cover. We're going to be looking at lifestyle. We're going to be looking at a few little tax tips. We're going to be looking at ratios, and we're going to start off with a list that Ed's just given me. So apparently we need some black curtains. I'd also like to welcome Ches Moulton to our group. Ches is one of our new consultants, so it could well be if you join our consulting team, he will be your team leader along with Vicky and Paul. And we've had an interesting week this week because I've had a great conversation with Tony Smith from Genius Technology Solutions for his phone systems, and we had a great interview, and he'll be coming out soon. And tomorrow I've got Jo Ashley, who is a coach with a difference because she's got a history in dancing. So lots to look forward to coming up in our videos. So talking about lifestyle. We've got lifestyle's a funny thing to talk to you about because it's really everything we do, and it's everything we want to do, and it's everything, and it sort of falls in two areas as far as a coach goes or an accountant goes. And you're looking at money values, you're looking at finding out what it is that you actually want and putting a money value to that. And if we can put a money value to something, then we can put a list of how many widgets we need to sell to achieve that. And we've got the other area, which to me is the big one, which is why I like working with coaches so much, because it's about motivations. It's deciding what we do want and what tricks we can put together and to make us do these things. But I don't really like talking on either of these subjects because I think it's really what people should be doing anyway. I mean, what gets me out of bed in the morning is probably the dogs barking, but it shouldn't be. I mean, here's a little motivation thing to think about. We wake up in the morning, the dogs are barking, or, we just got to get up at that time because the alarm's gone off. So we roll out of bed, drag ourselves into the bathroom, always the best thing to do, clean up, go downstairs, get whatever's in a packet, and maybe whatever's in a can, and we're in our car driving to work, and we get there and we're facing the world probably not at the best time. There are ideas out there that if you look at people that are wealthy and people have succeeded, maybe copy them. And an interesting fact is that a lot of these guys and girls get up a bit earlier. So they don't roll out of bed. They probably don't spring out of bed, but they do. They get up maybe an hour earlier, an hour and a half earlier. And they go into the bathroom, do what they need to do, and maybe have a bit of a cold shower, because nothing like a cold or lukewarm shower to warm you up. Yes, I did say that. And then they come out, go and sit down and meditate. So what do we meditate on? We meditate on what we want to achieve, where we want to be. We see ourselves in the role that we want. We see ourselves as the person we want to be. And then what do we do? Well, then maybe we have a coffee, and while we're having the coffee, we make our to-do list. We say, this is what we're going to do today. So sometimes it can be the list of actual things you want to achieve that day, little tasks, little things that you want to do, and sometimes it can be the person you want to be. So what do you want to be on that day? But there's so many ways and tricks of doing this. I mean, I've actually tried to do this, and apparently you've got to keep it going for about a week. And I've tried to do this, and it's never really worked for me because I'm not a morning person. But when I start doing it, I find myself a bit more refreshed, and I actually look forward to the day more. But the takeaway from that particular bit is planning your day. Everything about achieving the lifestyle you want is about planning your day. You plan the day. You plan the week, you plan the month, you plan the year, you plan your life. And the more you focus in on that, the meditation is focusing in. The more you focus, the more it's in your mind. It's like the kid with the bike. Dad, I want a bike. Dad, I want a bike. Dad, I want a bike. And eventually he gets the bike. So if that's what's in your head, that's what's in your head. So once you do that, and then we can measure it, we can put a plan together to know how many widgets you've got to sell, and that's what tends to happen. I mean, it's an interesting thing, money. I was looking back the other day about some talks I've given, and I've actually talked about money a few times, because I don't know if you know that money's not actually a real thing. I mean, it's an illusion, isn't it? It's an illusion that we all chase and we're all after, but money isn't real. It's a promise to pay, and it's a promise from someone you trust. I mean, in many years ago, it didn't matter whether money didn't even exchange hands. Just a note, a promise was enough, because if you went to the wealthy man in the village who could prove he's wealthy, I mean, some of them had gold, it could be under the sea as far as they're concerned, but they thought he had money, so a promise from him was something good. You could exchange that, and that's really how money comes about. It's a promise. I mean, we can talk about fiat currency, which is the same sort of idea, except it's by law you've got to use it, and the government makes that promise, not because they've actually got anything backing that, but they've got you trust in the government, not in God, in the government. And at the end of the day, the government can uphold its promises unless there's a revolution or a war or something, because the promise to pay is kept up by the taxpayer. So in actual fact, you are making that money viable. But we're digressing. If you want to know more about money from a practical sense, from an economic sense, and we can have that chat another time. But now we're looking at you're pursuing this money, even though it's not real, because it gives you the lifestyle that is real. The problem is you don't know what lifestyle you want, so you get up in the morning and you go to work and you just get hit with the day because you've just been tossed from pillar to post. And we need to put some tricks, and we need to put some systems in place to make that happen for you. So just running quickly through this, because these are all points that we will discuss through our courses. Get up early. Now, the other thing about getting up early is that not all time is equal. So it's great that you go to bed a bit earlier to compensate, but the time spent at night on Netflix, or just sat around watching TV, or not doing very much at all, is not as productive time as you've got first thing in the morning when you're planning the day and you've got the energy. So do look at maybe, I'm not the greatest one to get out of bed, but when I was doing it and I was in that mode, it was better than just slumping in front of the TV at night and then being tired in the morning. Failure is great. I love failure. I am so good at it, and I always find a new way to fail, because the reason why I say it's good is because you're constantly learning. So I don't fail at the same thing twice. I'm just finding new ways to fail. But each time I do, I get that bit stronger, and the failure doesn't matter as much. But failure is just another way of finding out what doesn't work. Everybody goes down the same path all the time. Conformity. Now, sometimes conformity is good. It is good, because you don't want to be too outrageous, you don't want to insult people, you don't want to break the law, you don't want to do anything wrong that gets people uptight, unless you happen to be Hayden Hewitt, who produces this show and spends his life insulting people. But if you're a normal everyday business person and just want to make a few quid, then you don't want to be upsetting people. But you don't want to be like everybody else either. So you want to make sure that you've got your USP. You've got to make sure that people know who you are, and it's not too much like everybody else. If everyone wants to buy things in red, then make your red a little bit different. Here's a biggie: reading. Reading doesn't just refresh the brain and teach you new things, it gives you some great disciplines. So I'm just going through a few things here that really nobody likes, or makes you uncomfortable, because you should be doing it, but you don't. And so just bear in the back of the mind, you don't have to make big changes. So instead of reading a book every week, maybe read one every year. Just get into that habit of knowing things. Start with Stephen Covey, it's great. Now here's one that you're probably really good at, and you're probably really going to thank me for saying it, but spending money is great. You just got to go out and spend money, but you've got to spend it in a way that's sensible. So there's no point, if things are bad, you start cutting down expenses, and you start cutting out things that you might need. So it's no good going down and sacking everybody, because there's a reason why these people are here. There's no, look at everything you spend and think, what do I need to do? What am I trying to achieve by spending this? And sometimes you hold back because you don't really know why you're spending it, so you think you can cut down. But it's not a case of cutting down or spending more. It's finding the things that work. So, for instance, I'm at the moment looking at a new department. And what I'm doing is I'm saying, to make this department work, I've got to have that, that and that. And therefore, I've got to put a budget to that. If I don't put the budget in or I don't want to spend that, then I'm not going to cut corners. I'm not going to try it. If it's not going to work this way, it's not going to work at all. So if I'm not willing to put that cost and the time in, then just don't do it. Now, the problem with a lot of these rules to success, is that we don't want to face them. You know, there are sacrifices to be made by facing these things. I've got a constant problem with getting paperwork off people so we can do their tax returns, so we can put their accounts together, so we can give you something interesting for you. But we can't measure anything because people don't bring the paperwork in. People don't, even when we want to collect it, they don't bring the paperwork in. They don't set up software. Why? I think it's because you just don't want to face it. Because it's like looking at the bank account when you think you've got some money in it and you don't want to look at it in case it's less than you think, and then you've got to make decisions. So I think that the biggest problem that people face in actually getting anywhere is deciding their goals, because they might not be able to achieve them, or they might be unrealistic, and this is why I have a team of coaches to help you get past these limiting beliefs. You know, but at the end of the day, it is serious, and if you're not doing too well, or you're not doing as well as you could be, it could be because there's something stopping you from doing it. So I can sit here all day, I really can, and I can give you loads and loads of ideas for cultivating some sort of motivation, or giving you little tricks to try and get over that. But we can talk about them more individually, because I think that's better. I think really just bear this in mind. Get up, clean up, and get out there and go and do stuff. Doesn't matter how tired you are. If you do it every day, apparently it takes a week, 2 weeks to really ingrain it. I gave up in about a week, but I still do some of this stuff, and I try to, so it's still at the back of my mind. So even a little bit works quite well. Now, I'm going to just give a break on lifestyle for a minute, because lifestyle, deciding what you want out of life, is all about asking questions and asking the hard ones. Now, I'm going to give you some questions soon, just so that you can have them in your head and take them seriously. You know, I'm not going to ask you to answer them. Well, you can if you want, answer them in your head, or talk to us about them. But I just want to just flip a little bit over to tax, because I think people don't realise what tax truly is. As far as we're concerned, we look at HMRC and thank them for. I mean, we're in partnership with them because we call them our marketing department. Because without HMRC, we probably wouldn't be as useful to people traditionally. I mean, we are useful because we can give them information, help them grow the business. But at the moment, we spend a lot of time making sure people comply with legislation. So, but tax is an interesting thing. If you look at it this way, they provide an infrastructure for you to operate your business, whether it's VAT or whether it's corporation tax or personal tax. They do provide a magnificent infrastructure most of the time to help you run your business. I mean, I don't think you've ever been to some of the more third world countries or countries with bad government and try and operate a business there. And believe you me, giving them a little bit of a cut of your profits isn't such a bad thing when you think what they're enabling you to do. And at the moment, they're giving grants, they're giving all sorts of things. And I know it's not enough, because it's never enough, but they're still doing that. So it's not all a one-way street. But there have been lots and lots of instances of tax that I found amusing over the years, of what the tax people have done and what people have done to try and get out of paying it. So I've just made a list of a few things here which I thought was amusing. Like, for instance, during the Middle Ages, there was actually a tax on soap. You know, that's probably why they're all so filthy and never washed, but you know, that's what it is. There was actually one of the more famous, more well-known stories was there was actually a window tax. That the government actually were taxing households based on the number of windows they had. So guess what happened? Yeah, well, people started bricking up the windows. And that's where we get the term daylight robbery from. I just thought I'd put that in. There was this is a bit of history here, because the Russian emperor Peter the Great actually put a tax on beards. And the reason for that was because he was trying to get men to adopt the clean-shaven look that was common in Western Europe, to try and copy Western Europe and the economies and everything went with it, because obviously Western Europe was doing a lot better in those days. So tax isn't just about taking profits and redistributing them. It's about guiding people and countries into certain activities and with a desired result. The French had a salt tax. And apparently it angered the French so much that it was actually one of the factors that led to the Russian Revolution. So all those people having their heads cut off and putting all those poor hat makers out of business was because there was a salt tax. The British did the same as well, and it actually resulted in Gandhi staging non-violent protests about it. So there's all sorts of things that have gone on in with the tax world. I mean, apparently Alexander the Great conquered half the world by sending out notices before he got to the cities he was trying to conquer and saying, listen, if you join us, we'll reduce the tax rate to nil. And he had people surrendering before he got there. I think it's a true story, but if not, it's a good one. There's other things about protecting the home-based businesses, where Japan used to tax whiskey based on the percentage of alcohol. So Japanese whiskey manufacturers began diluting the whiskey with water to avoid the tax, which gave them an unfair advantage over European whiskey, which was couldn't dilute the drinks. Here's a great one. King Henry I allowed knights to opt out of their duty to fight in wars if they paid a tax. It's called scutage. The tax wasn't high, but then King John came to power and raised the tax rate to a rate of 300%. So obviously people decided they'd rather go and fight than join the army than pay that tax. In the 1700s, England actually placed a tax on bricks, but builders soon realised they could use bigger bricks and therefore fewer bricks, and then paid less tax. But obviously the government caught on and then placed a larger tax on bigger bricks. So there's always this fight going on. There was even a tax in the 1700s where England put tax on printed wallpaper. So people started putting hanging plain wallpaper and painting it. There's all sorts of things. Tax on candles. There was even tax on the powders that men used to put on their wigs, which led to the decline in wigs. And this isn't, I suppose it is a tax, but the TV licence, the annual fee for the TV, apparently if you're blind, you only have to pay half of it. So I just thought I'd look at tax. But while we're actually talking about taxes, can I just draw your attention to some ideas that can be implemented to reduce like PAYE type tax? I mean, for instance, before I tell you that though, bear in mind that almost probably more these days of tax saving plans for self-employed involve looking at some form of investment, especially pensions. And this is excuse me, this is something that you should look at. So if you have a financial advisor, do talk to them. If you don't, do talk to me. I'm not a financial advisor, but I can sort of go through stuff with you and put you on to somebody who is. We do tax reviews all the time. So if you've not had a review or you'd like a review, just let me know. We can go through everything. But just looking at this, there are some things you can do, and we'll tell you how to use them properly. Like, we've got to make sure that you're using all the personal allowances available in your house. Like if you've got kids of 18 or any age really, and they're working for you, you can use their personal allowance. And if they're not working for you, maybe we can give them some nominal job to justify paying them that salary that helps you use their personal allowance to offset your taxes. There's an interesting one here, that an employee, if they come up with an idea that is beneficial to the business, you can actually pay them up to £5,000 tax-free. That's a good one. There's obviously a criteria. But it's worth looking at. I mean, the idea is that people innovate ideas and improve your business all over for you. So you reward them with a tax-free bonus, and there's ways we can incorporate that into the way we pay people. There's if you do have a parking facility, obviously if it's part of the building, you'd have to pay extra for it, then forget it. But if you pay for your a member of staff's car park, then that can also be a taxable benefit. So there's all sorts of things like that. You can even, if you help them move house, you can give them expenses towards that, which is tax-free. You remember golden handshakes, so up to £30,000 can be paid tax-free if the compensation is for loss of employment. And obviously there are, well not obviously, but there are share incentives. There's all sorts of share incentive schemes that can help reduce tax and national insurance and the liability all over if that's what you're looking to do. Obviously share incentive schemes can be quite complicated, but they are there if you want to talk about them. Now there's been a lot of a shift into people moving into the working from home, and it's not something people can claim off you, but you can pay household expenditure for people working from home on a tax-free basis. Now people have often argued, and members of staff argued, they're using more expenses because they're working from home, but at the same time they are saving in travel expenses, and they are saving probably what they spend on food and all sorts of things. So it's is anybody really out of pocket for this? And they might even be better off. The point is, you can incorporate contributions to expenses within their wage brackets and offset some tax that way. You've got customer client entertaining. Now, everybody used to say, I'm taking somebody out on the business, and it's, I can set it as a business expense, and it's not as clear cut as that. However, if you do take a client out for dinner, then, and we reimburse that person, then it is a tax-free payment to them, even if they enjoyed themselves. So just bear this in mind. A lot of it's how you structure payments, and of course pension payments into a pension plan that's got, like I said before, it's not just benefits for the self-employed, it's benefits for members of staff as well as being a sort of legal requirement under the new auto enrolment laws. Childcare vouchers. Now, do go online to the HMRC site, whether you're an employer or an employee, because there's all sorts of benefits for tax-free childcare and even subsidies. So you can go onto the HMRC site. I'm not an expert in that area, but because my children are all gone and got their own kids now, but certainly do go onto the HMRC site and make sure that see if you're eligible. It's very good to have. Now, you might remember that certain assets are taxable benefits in kind. So if you're really going to give someone a benefit like that, then maybe consider second-hand stuff, because the price, the logged value is so much lower, so therefore the taxable benefit is lower, and you don't have to necessarily reduce the quality of what it is you're trying to do. For instance, company vans that are driven with unrestricted private use is a good way of reducing tax payments, because obviously they can have a vehicle as long as the van and driving to and from work doesn't count. Mobile phones is another one. There's no liability for tax and national insurance if you take the contract out with the company. And there's lots of disputes always about accommodation, where you supply accommodation. The general rule is that the value of the property, the value of the rentable value of the property, is what's used as a taxable benefit, but there are exclusions from that as well, if you want to look into that a bit more. And here's a big one: loans from the company. So you've got to remember that any benefit you get or you give to an employee, including directors, can have a beneficial tax side to it, which means you'll get taxed on the value of the benefit you're giving as if you were giving cash. So, but there are, again, we've talked about a few ways of mitigating that. Loans is a big one, because technically if you lend money to people, then they're getting a benefit because they're getting interest free. But there are ways of reducing that. Like, for instance, if it's just in the normal course of family, it's fine. If you send a lending to employers earning less than £8,500 a year, as long as they are directors, and you can use a director's loan account as long as it's not overdrawn throughout the year. So it means if you take £5,000 and it's £5,000 all the year, you could end up paying tax on the benefit of that. By the way, directors' loan accounts, I think it's over £10,000, are taxed at 25% tax until you pay it back. So directors' loans account aren't something you can use to reduce your tax burden, but they are there if under certain circumstances you can get loans from a company short term, so without actually having to pay tax on it. Now here's a good one. You can actually pay as an employer £150 a head for staff, gifts and Christmas parties and stuff like that. And as long as it's for everybody, it's fine. I mean, you can get £5 a night if people go away. I mean, that's just for things like laundry, newspapers, so that's not of any great value to anyone. And there is the idea of subsidised canteens. Now, a canteen is not necessarily have to be in your place. It can be anywhere that serves food as long as you're paying for it. So, and it's available for everybody. So, you can use these types of things as in parts of the way you structure somebody's remunerations. There are things like long service award that you can give a non-cash award of £50 for every year the employee's service, as long as it's for more than 20 years service, and that's also tax-free. And there's what we call trivial benefits, where you don't have to declare it or pay tax on it if it costs you less than £50. It isn't cash or a cash voucher, and it isn't in the terms of the contract that they get it. So there's all sorts of things available for you. None of these are life-changing. They're not going to save you fortunes, but if they're available, you might as well take advantage of them. So that's something just to bear in mind. Now, just as we move on, I feel that people don't really understand the analysis of the numbers very much, and in fact, so many people say to me, it gets very boring talking about numbers. But numbers is the world we're in, so tough. You've got to learn these numbers. Even if it's when your accountant talks to you about them, you should know what it means. So just a quick little summary. So first of all, here's a statistic for you, that apparently around 25% of business owners are treated at any given time for some sort of mental neurosis. I think I should be one of them, including various psychosis, psychopathic or sociopathic traits, and general delusions. So are you all we've got to be a bit deluded, otherwise we wouldn't be in business, would we? But it is worrying, this, because it's a worrying ratio, because it means that 75% of business owners are going untreated. Bum bum. And it gets worse, because 3 out of 2 people have problems understanding ratios, and the other half don't get fractions either. So I'm going to tell you a little bit about ratios, because they're an interesting area of business analysis, and it's very, very important, especially if you're trying to raise finance or look for investors, or even look to sell the business, or even to test how the business is doing. And everything in business comes down to measurement. So we're looking at there's basically four methods of accounting ratios, and one of them is liquidity. I think we've mentioned it before. There's a current ratio, where we look at the relationship between current assets divided by current liabilities. That's liabilities that you have now. That's people you owe money to, and assets that you've got now, like stock, debtors, cash, that type of thing. And obviously we want that to be quite high, because the higher it is, the higher our assets are compared to our liabilities. If liabilities are higher, then we're going to run into cash problems, and we're probably not going to last. The higher that ratio is, the less likely we're going to last. Then we have the quick or acid test, which is the same thing, but we take stock out of the equation, so it makes it really harder. Now we've got things called defensive intervals, like liquid assets. So we just take our liquid assets, like stock, like cash, like debtors, and we divide it by the daily operating expenses. That's rent, rates on a daily basis. And this sort of measures how long the business could survive without actually without any cash coming in. And if it's sort of longer than 90 days, you might have problems. And this is what's happened with COVID, because we've not had the proper reserves in place. A lot of people have, but a lot haven't. And it's no one's fault. It's just sometimes we live day to day. We live, hand to mouth. Then you've got solvency ratios. This is something that's interesting, because if we add all the loans we've got, everything, and work out what we've got. The more loans we've got to actual assets is the more likely we're going to have problems. So, in other words, if we don't have any loans and we've got plenty of assets in place, then we're quite strong. So we might have £100,000 worth of stock, but if we've got £100,000 worth of creditors, then we're not really doing that great. And looking at efficiency ratios, there's basically three types. We've got debtors turnover. So what we're looking at, debtors, creditors and stock. So debtors turnover are the people that owe you money, and we want to measure how many days it takes them to pay. We call it an aged debtors lift. And then we've got the creditors turnover, which is the other way. How long are you taking to pay? Obviously, it's all about efficiency. Creditors could lead to cash flow problems. Well, they all could, to be honest. And then we've got stock turnover. So how many times a year do you turn your stock over? So your stock divided by the sales. And we've got profitability ratios, and we've got more, but I think you get the gist. And we will talk to you more and more. I mean, every time we do a review of somebody's accounts, we do look at these ratios. We might not always discuss it with people, because people tend to blank off when I start talking about this type of thing. So even now I'm talking and I'm getting bored of it, so I'll put that one aside. But I think you get the gist. We've got to be a bit more proactive with everything we do, and we've got to consider everything. The number crunching, not so much. That's why accountants come in useful, but certainly understand the results, not just looking at the bottom line, not just looking at the overall picture, but looking at each section of a profit and loss account and balance sheet and see what that actually means. So now what we're looking at, so now I've come into the last leg, and the last leg is really, I'm not really wanting to talk anymore. I just want to give you some questions, because I really want you to think. When we look back at what happiness is, because now we're looking at lifestyle again. What we're looking at lifestyle is that I think Charles Dickens said that happiness is expenditure of 19 shillings and sixpence, an annual expenditure of 19 shillings and sixpence, and 20 shillings income. So happiness is being able to cover your debts, and presumably if you're covering your debts and expenses, it's based on you achieving the lifestyle that you're happy with and what you want. So that takes a lot of stress away. I mean, not achieving these things doesn't have, of course, some stress, which is why Ches Moulton, one of our new consultants, is there to advise on anxiety. But then again, all our consultants advise on that as well. The other point of knowing what income you've got coming in achieving your income is being able to explain to HMRC and show them that you're achieving that income as well, which is always that bit less stressful when the taxman's happy with you and you're not living above your means. A lot of us live above our means, but so how do we find out what we're doing? Well, to start off with, list all your household and personal expenditure, and then make sure that you've got an income coming in that covers it. So if your income is lower than your expenditure, we've got problems. We've got problems because we've got to get you out of that mess. Basically, if you spend it, record it. And if you receive it, record it as well. Just incidentally, when we are faced with living beyond our means, there are things you can do about it, but sometimes you've got to take a step backwards and breathe, which might mean we need to consider reducing drawings. That's money taken out of the business, and looking at alternative sources of income, which you're going to be very proactive with at the moment, especially if the business isn't trading. There are part-time jobs around that you wouldn't normally consider, but do consider different sources of income. If you've got a pub, make sure that you're offering takeaways. If you've laundrettes can open at the moment, But look at your delivery services, look at pickup services. You've just got to use what you've got, and hopefully we can get through this. We need to look at profitability increases, because sometimes people are just selling too cheap, or they're not selling enough, or they're just wasting money on expenses that they could be wasting money on other types of things that bring money in. Sometimes bookkeeping is so bad that we can't really tell you where you are, and you're going on the basis of how much you've got in the bank. And sometimes it's even as drastic as changing the direction that you're going in. So if you've now decided that the type of business you've got is not viable anymore, not just, many years ago, I keep mentioning handbags because I grew up in that business, and when I was a young teenager, not only did the handbag business suffer, but the whole industry was dying. So, being a manufacturer in those days was finished. So people had to turn to using the facilities they've got, or scrapping them and getting new, and moving different areas. Walls sausages, Walls ice cream, one props up the winter, one props up the summer, or it did in those days. Now, just another confusion. I know it's not about lifestyle, but in the sort of way it is. People often believe that the drawings are less than the profits and wonder where the profits have gone. You've got to realise that drawings don't reflect on profit. It's just what you take out of the business. And quite often, the profit isn't in cash. It's in stock, or it's people that owe you money, or it's in other assets. So even though you've made the money, you might not have it. You might not have it in cash. So this is where cash flow planning comes in as well. There's also, but basically, remember that you don't pay tax on drawings. So sometimes you can earn more money than you take, because, like I say, that the cash might be somewhere else. It might be that you've bought a lot more stock. It might be people that owe you money. It could be lots of things, mainly those two things. But if you've not taken the money out, it doesn't mean say you haven't earned it. And on the other hand, just because you've taken the money out doesn't mean say you've earned it, and you only pay tax on what you've earned. But both sides indicate cash flow problems, so it does need to be looked at. Because remember, if you're taking money out of a business and it can't afford it, you're going to get into debt, your overdraft's going to go up, your assets are going to go down, your creditors are going up. So just bear that in mind. And sometimes it's not just about how much money you take out. Sometimes here's I'm going to start the questions now. So, do you know how much you save or spend each year? Could you tell me how much? I'm talking personal, not in the business. But how much do you spend? Do you know that? Do you know what your current net worth is? How much you're worth? Most people say, well, my house is worth this, but is that the sum total of what you're worth less the mortgage? So it's interesting to know, because it's not only motivational, it's depressing sometimes, or but it's there. Are you borrowing money the most efficient way? This bounce back loan was great. You can get 25% of your turnover on a loan at very low interest free for a year. Don't take it for the sake of it, but I've got a question. I have is to more productive and procrastinate less. I'd also like to look more comfortable money-wise, but that comes from being hard-working. You know what, JT? I think you're right. Well, I don't actually think you're right, because I don't think it comes from hard-working. I think hard-working is an attitude we should all have, but I think what you've got to do is work smarter, work cleverer. It's just as easy to sell things where you're earning 50%, things that you're earning 10%. We've got to work smart. We've got to be in control, and this is what all this is about. Working hard is something we do anyway. If you don't work hard, and you're still making money, well, good luck to you. So, but just going back to this is what I'm saying. Here's something. What are the 10 most important things you would like to accomplish while you're on this earth? We might all be going to Mars soon anyway, but while you're on Earth, what is it that you'd like to achieve? Now, these are hard questions, because most of us will sit there and hear questions like this, and we just don't want to answer them. We deflect back to the last football game we watched, or we deflect back for something different. And then have you ever heard of human capital? So that's how much do you invest in people around you? How much do you invest in yourself? What's the ultimate investment you can give yourself? Yes, it's not education, it's a Ferrari. But these are questions. I mean, here's another one. Do you have a business exit plan? Do you know where you're going? Do you know what you want to do? Because tomorrow comes very, very quickly. I started in business when I was 17. I'm now 58. It just keeps going, keeps passing. And are you prepared for retirement? Well, I'm never going to retire. I'm just going to keep the business running. I'm just going to try and be here in the background. I'm just be talking to you till you get fed up of me, and even then I'll come knocking on your door with my camera. And like we mentioned before, do you have the necessary money in an emergency fund? How long can you live for until you go, cap in hand or with your begging bowl? Does long-term care sound plausible to you? Does it sound is it something that you've considered? My long-term care is basically Melanie, my partner Melanie. She's going to look after me. Do you have a will? Do you really want the tax man or people you don't like getting hold of all your assets? Have you got any assets? So, have you looked at these things? Why don't you look at these things? Why do you need me to tell you? Honestly. Is there anything, apart from what I've told you tonight, that you can do to reduce your income tax that you're not doing? Do you even know? Do you want to have a chat about it? You need to know. What's your risk tolerance like? Are you a gambler? Or do you take calculated risks? Do you just want to not take any risk at all? Do you just want to wage? There's a few things here, but I think it's not relevant now. What have you ever measured over the years what doing what you do has brought you in every year, and how does that compare with other things you could be doing? So, being an accountant, I could have been something different. Would I have earned more if I went and was a dentist, or I actually fancy being a famous football player, but I can't play football. I don't really know the rules of the game, so that's off the charts. But you get my gist. Now here we go. If you only had 5 years to live, what would you change in your life? I'm not asking you to answer. Just these things are to make you think. And if money was no object, what would you be doing right now? What would you be doing, Ed? You wouldn't be here. Travelling the world, yeah. Well, maybe not now. Must be some cheap flights out there now. And this is a horrible question. If you're going to die tomorrow, what do you regret not doing? You know what? There was that chocolate cake the other day that I resisted. Maybe I shouldn't have done. So there's all sorts of questions, and we can go on all night with these. Think of when were you the happiest? What were you doing? What are you scared of the most? I would imagine it's admitting that you're scared of something. What talent would you like to have? I just want you to think. I want everybody to email me today, tomorrow, and during the week what your motto is. What saying do you live by? We've already mentioned why we should be concerned about demonstrating that we can afford our lifestyle. It's mainly about the tax man and sustainability. This is printed out from the course I've got. I've got a PowerPoint presentation with these questions, and one of them is, give me 3 reasons why good records are important. Good records are good business, because you don't get into trouble with the tax man. And most of all, you can measure what you're doing, or maybe most of all should be the tax man. And if we were going to plan for a financial lifestyle, could you tell me 3 things that you would do to get the ball going? As the old saying goes, life is short, eat cake. Thank you, JT. I should eat more cake. Apparently not, though. So you get the gist. I mean, I do have more questions now, but I just want you to get out there and realise that being motivated, achieving your lifestyle, it's not about standing up and saying, I'm going to do this. It's every day doing little things that start to change your mindset. how many sausages do you need to sell to achieve the annual income you want? And really, before we can even answer that, we need to find out what lifestyle you want and what has to be sustained. So it is planning, and I'll say the same thing day in, day out. Know where you're going, know what you want, and know what you need to sell and how much to achieve it. So please do download the PowerPoint on this particular subject, and please do fill in the questions if you can. Obviously, send it to me and I'll mark the answers, but it's a great basis to talk to you about what you can do to start improving things, and that's all I want. And if we all did that, I can come on and just tell you jokes all night. But anyway, thank you for joining me tonight, and I hope you have a nice week, and I hope lockdown doesn't affect you too much. And again, go and subscribe to my YouTube channel. It's not so much that you'll get notified when we have a show. I just like to see the number of followers going up. But thank you very much, and we've got Hayden at 10, so don't forget to join us then. And thank you everyone that's making this happen, and I'll speak to everybody again next week. But remember, during the week, if you're already in one of our coaching groups, we do have the meeting, the face-to-face meetings with your group leader. Please join them. I mean, we had Vicky sat there on Saturday waiting for people to join, and it was just me and her there. So do join. It's in your interest. We can start. You can start asking questions. Paul's hosting one as well. And Ches the same. So do tell them what times would suit you. And we really want to get this going. We want everyone earning lots of money and getting everybody what they want and happy. And I don't have to be attending too many liquidations. Take care of yourself. I'll speak to you soon. Bye.